Hey everybody, welcome back to Message from the Founder. I'm filling in for Brian this week and have an interesting week to talk about. So, we'll talk about the winners. First thing that stuck out this week, Bitcoin's up almost 20% and gold is coming off of a 3-month high. When we see some gyrations in the bond market with interest rates, those asset classes usually rise. That's exactly what we've seen this week. So, yesterday, market had a bit of a sharp sell-off. It's back up again today, but it's certainly ending the week a little bit shakier, especially as compared to some of these record highs that we've seen in previous weeks. But what happened this week is the Treasury made an announcement that they are going to double the rate of their buybacks in the bond market. So what they're essentially doing is a lot of these long-term bonds, the Treasury is going to buy them back because they're not as attractive for consumers. They're not wanting to buy them. The Treasury is going to buy them. In theory, this is supposed to help create liquidity at banks, make them a little bit more flush so that they can better loan out money. And what they're really trying to do is target the mortgage rates. That seems to be a big bone of contention with a lot of folks right now, just from an affordability perspective, buying homes. So in theory, making this money more flush at the banks, the goal is to combat inflation and make money lending more favorable. The challenge is that I don't know that everybody is quite buying, no pun intended, or believing that this is actually going to help. And I think that in general, folks are probably correct in being a little bit just skeptical of this, because we know that the more that government gets involved in markets, usually the more inefficient they become. And it's really interesting that we read a great article from an economist earlier this week that was just talking about some of the political movements that we're seeing in New York and Michigan and those sorts of places. And those groups are saying that the affordability crisis, inflation, all of these things, which is primarily driven by a younger generation, is being caused by market failure. And it is simply not true. If we peel back capitalism in its purest sense, people's dollars, their votes, would go to the person who's the most creative, probably took on a lot of risk, and created a product, for a good product that was cheaper than what everybody else could do it for. So capitalism, when it's left without being bothered, so to speak, it really can't fail from that perspective. But what the problem is that when the government gets involved, they start to get in the way of things. And what by that, GDP, especially, we've seen incredible growth of government in terms of percentage of GDP over the past more than a couple of years, but just this never waste a crisis type of mentality. But we're up to GDP in terms of government and government regulation. So what the government's actually producing, and then the regulations that they essentially are taxing the private sector with. It's up to 47% of GDP. So what happens when they involve themselves and put all these regulations and all these taxes and everything on big companies is the cost trickles down to the end consumer. So it's important, I would say one of the most important things we can do is to help people understand those mechanisms in the economy, because we've got groups, ironically, that are voting for more government when more government involvement is actually what is contributing and magnifying a lot of these issues that we're seeing, because the cost always trickles down to bottom line. So if you tax corporations, if you tax wealthy corporations and you put more regulations on everything to make it more expensive for them to produce goods and services, well, those companies aren't just going to be able to eat those costs and be profitable. The only entity that can just print money and be effective, questionably so, is the government. But companies can't do that. So it's going to pass down to the bottom consumer. So I think it will be interesting to see how this buyback program works. If markets buy it, in theory, it's supposed to work. But in reality, what would probably be the best is the government just got less involved in everything and pulled back some of their tentacles and their cost so that markets could act a lot more freely and people could get more things for more affordable cost. And so that's what we're really seeing. We saw that happen just in the ups and downs of the market this week. But I think that's really the most important update. The economist, I think a lot of you guys might like him. His name's Brian Westbury. We get a lot of really good stuff from him. So if you look him up, you might be able to find that article. I think it would resonate with a lot of our families. But without further ado, lots of stuff to think about this week. I'll certainly get to the birthdays. I hope everybody has a great weekend and they stay cool. And if anybody wants that article, like I said, feel free to shoot me an email and I'll be happy to send it out, because it was probably one of my favorite that I've read maybe this year. So anyway, birthdays from this week, we've got Anthony Z, Brenda D, Chris L, Matt B, Adolph U, Brad B, Joyce S, Lisa H, Ann M, Bar W, Colleen, Jamie S, Josh A, Lori G, Pat H, Sue K, lots of birthdays this week, Aaron M, Lori C, Mickey B, Sandy M, Stephanie C, Terry, Lena R, Randy H, Joe B, Bob T, and today we've got Coburn M, George F, JJ, Matt F, Mike W, Amalia P, and tomorrow Carl J, Charlie M, Kia B, Tanya D, and Marty P. Happy birthday to all of you, and we will be back next week.